if your goal is to have passive income from real estate, as an example, the ability to have depreciation and writing off parts of your vehicle or home office or travel expenses really results in the ability to have more income without higher taxes.
Are you ready to transform your life? This is a no-nonsense show helping immigrants like you create generational wealth, even while working full-time. Get ready to take notes. Here's your host, Saket Jain.
Welcome back, Migrate to Wealth listeners. Today, we have on our show a tax expert. I know I promised you guys I will bring somebody on, but I wanted to find just the right one for us. And we have the person now, Amanda Han. Amanda, how are you?
I'm doing great. Thank you for having me.
Yes, for those of you, if you ever search for real estate and Amanda and taxes, there's no reason you will not find Amanda on the website. She's written 2 books that at least I have read. I'm not sure if she's written more than that. And she's been one I've been actually secretly following for the last few years. But now we have on her show, and we'll figure out how to save taxes. Amanda, thank you, and great to have you.
Awesome. I don't know why you were secretly following me, but
I don't know. I didn't feel comfortable. Secret, right? I didn't comfortable reaching out to you, but now I do. I've been secretly following a lot of people.
I'm really excited to be here.
No, thank you. Thank you for taking time. This is our pleasure to have you on. Amanda, I know you're a tax strategist and a tax accountant. Give us a little bit of background on, for our listeners, what you do beyond just saving people taxes, which you do, but I think there's a lot more to it than just saving taxes. So give us a little bit of brief intro about you.
Yeah, sure. My background, I actually came up in the ranks working in public accounting for one of the big 4 firms. Started out my career at Deloitte, and I happened to end up in the real estate specialty group. So I worked on a lot of the large real estate investment companies, developers, a lot of the REITs and stuff. And then my husband also worked with me as well in the high net worth individual group. So there's a lot of overlap, right? Wealthy people and real estate. But it wasn't until years later that I realized I should get into real estate investing myself as a way to build wealth and also for tax savings. So I just always think it's interesting to share for people that even for me, a CPA who specialized in real estate, worked with real estate investors, it took me several years before I realized that it was something I should be doing for myself. So I think for all of our listeners, you're like way ahead of the game because a lot of people aren't even thinking along those lines.
Isn't it interesting? Because, it's a common question that I get from my investors and even some of my audience that, hey, my CPA tells me this is not possible. And I don't think there's anything, just a knock on a CPA. I think most of them generally don't know, right? And that's a time. That doesn't mean that they're bad or they're intentionally hiding something from you. It's just that not everything is known to everyone. Unless you specialize or get exposed like yourself into an area, you may not have that aha moment.
Yeah, for sure. And I think, taxes are very much like the medical practice or even in tech, right? If you're someone who's doing like hardware stuff, you probably aren't an expert at the software side of things. And so it's just making sure you're working with the right person. And taxes is the tax code is just overwhelming. So it's very difficult for a practitioner to be an expert in all things taxes, right? So either, you try to specialize in real estate or you specialize in the medical field or you specialize in manufacturing. And I think that's the reason that a lot of people miss out. Like you said, if you ask your tax person, can I do something? When they say no, it just might be a lack of education or understanding. Not that they're maliciously saying, hey, I want my client to pay the highest tax. Like nobody ever says that, right?
Correct.
But I think it's really from an investor's perspective, like how do we protect ourselves and make sure we're working with the right person based on what our investment goals are.
So Amanda, before we get on the exciting topic of taxes, which I always love, and I'm sure you do too, let's actually talk about your journey into this world of taxes, right? How did you, the name of our show is Migrate to Wealth. We're always interested in learning about people's migration journey, kind of like how you got to be what you do. I know you mentioned how you got to do the real estate tax saving well, but what got you into, did you grow up to be a tax accountant? Was that something that you always wanted to do? Or how did you end up being a tax accountant?
Yeah, I did actually. So my mom, was an accountant, and I have other accountants in my family. And so my mom always just said, you should get a job as an accountant. It's very stable, right? And I was good at math. So
Yeah.
for job stability,
Surprise.
it was kind of just like, yeah, like that's what you should do. And so I think it just worked out, it just happened to be something I was good at. I always knew I wanted to do it. And there was a point in my life where I read Robert Kiyosaki's Rich Dad Poor Dad
Everyone.
book.
Yeah. The purple book changed
Everyone
people's
has read it,
lives.
right?
Yeah.
Purple book, yeah. And so and that's when we decided to invest in real estate. There was a moment in our time where we said, we don't want to do taxes anymore. We're just going to be like full-time real estate investors, go out and get deals. And really quickly, I think my husband and I realized it's not what we were passionate about. Like we wanted real estate
Right.
to be part of our wealth building, but we didn't really thrive in being like a full-time investor. And so we were really fortunate because around the same time, we found out there was a need for everyday investors to have tax strategies. Like we worked
Right.
with a lot of these very large companies, wealthy people, in the corporate side, and then now seeing, some of those strategies can be implemented for the everyday investor as well. So we're able to kind of combine our passion on the tax planning side in conjunction with our desire to be in real estate and then create our company, Keystone CPA, so we can kind of do both, right? Bring the two worlds together for tax strategies specialized in real estate investing.
I love that. So, Amanda, you said a beautiful word there, which I know it's probably you use that all the time. Tax planning. A lot of people don't do that, right? I'm sure you see that in your world, where most of the folks are coming to a CPA like yourself is only when they need to file taxes, which is really, depending on what your tax cycle is, either April or October, right? That's the only time they talk to their CPAs. And then they talk about, hey, how can I save taxes? But talk to us about the importance of planning in the world that you live in, right? Especially when you're trying to minimize your taxes, hopefully not maximize your taxes. You want to minimize your taxes. That's the goal of hiring someone like yourself.
Yeah, I mean, tax savings, to do it correctly. And when I say correctly, I mean, following the rules of the law and not just making up stuff, making up numbers, making up,
Yeah.
facts and things like that. So to do it correctly, really the only way that it could be done is through planning. And by planning, I mean, just understanding what you need to be doing during the year as an investor or a business owner or an employee, understanding what are those things that you should be doing and doing them during the year, whether it's capturing your expenses or having the right legal entities or investing in the right types of real estate, right? So when you know what you should be doing and you do those things, then by next April, regardless of who's filing your tax return, you should get the optimal tax savings. Why? Because you did all the right things. You created the right facts. On the other hand, what you were mentioning for a lot of people, April, right? January through April is like, man, I got my W-2s. Gosh, I wish I paid less taxes. What can I do now? Unfortunately, the truth is there's not much you can do now, right? You can't unring a bell. You can't go back and pretend you bought real estate last year or you did certain things last year. And I think that's why the biggest difference, I think maybe even like one of the most common mistakes that all taxpayers make is assuming that whoever's preparing their tax returns is also helping them do planning. So important to understand those are two completely different things.
May not be a completely different person, but they're two different things.
Yep, exactly. And it very well could have, like, if you're right now meeting with your tax person filing last year's return and you don't like the result, right? Let's say you talk to your person and say, gosh, I'm paying way more in taxes. And then the question is, well, what can I do this coming year? Do we have time to talk about it today? Or are you, if you're really busy, maybe we make an appointment in April or May when we can sit down and talk about what is it that I plan to do for 2023? What are some of the strategies I can use going forward, right? Two different conversations.
Correct. And I think the planning conversation is really more where you use your strategic thinking, right? That's where the creativity comes in to make sure that we're representing the facts appropriately and we're empowering I know in my case it has happened. Now, I'm a self-taught tax guy. That's why I was secretly following you. I just learned from people like yourself by listening to you, reading upon it, researching in it. It's because I wanted to learn, right? Not everyone's going to go through that journey. But now having someone like on your side, especially on the planning side, you're not creating facts. You're helping people with their already existing facts. And you are telling them how those facts could be helpful to save them taxes. And in some cases, how changing certain facts could help them save taxes as well. Is that correct? I'm oversimplifying your world.
Yeah.
I know that.
Yeah, definitely. I mean, I think that, one of the things I tell people is if you have the right facts, you can pay less tax. And there's different ways to pay less tax. It could mean just really reducing taxes overall, or it could mean making more income while
Hmm.
not paying more in taxes, right? And so, yeah, the planning is basically helping people to make sure they have the right facts during the year so that by next year, when they're claiming certain things or taking certain deductions, that those are done legitimately, that you have documentation to support. This is very important, especially for higher income individuals,
Hmm.
because we all know that the more money you make, the more taxes you pay, or at least the higher tax rate you're in.
Yeah.
So for someone who's in, between federal and state, if you're in the 30-40% tax bracket, $100 in tax deduction could save you 30 to 40 bucks. And so if you add that up over, the time frame of a whole year, that could be some very significant tax savings.
Yeah, and Amanda, help us understand this, right? This is my own thesis, and I could be wrong, so I would love to get your perspective on that. The IRS guidelines are predominantly the guidelines on how to pay less taxes. They're not there to tell you how to
Mm-hmm.
pay more taxes because, as I understand, listening and reading and following up on experts like yourself, is that the tax code has incentives in programs that government would really like to do, but they don't have the hands, the power, the manpower to do that. So they really are depending on people like ourselves to say, hey, if you do X, I'm going to give you Y amount of ability to deduct your taxes. How do you better articulate what I just said or validate or refute it?
Mm-hmm. Yeah, exactly. No, I think I completely agree. A lot of people, and even CPAs or tax advisors, unfortunately, put the government or the IRS framed as a bad guy, right? The bad people. The
Right.
IRS is coming to get you. But the truth is that the tax code are actually just a whole set of tax incentives where the government wants you to do certain things. And we see that a lot. Most recently for business owners and real estate investors, we have bonus depreciation.
Mm-hmm.
And this came about because the government said, we want to stimulate the economy. We want you to go out and build your business. We want you to buy assets for landlords. We want you to,
Right.
rehab the properties and give them new appliances. And they give you, larger write-offs up front. And we see that on a day-to-day basis from an investor's perspective, especially like for last year, where people are saying, gosh, should I really buy these assets for my business, for my real estate now,
Mm-hmm.
or should I wait? And a lot of times people do it earlier than they otherwise would have done it because of these tax incentives, right?
Yeah, no, I completely agree. So, I mean, we threw a lot of few things where in that statement. So we're going to start parsing things, right? We think about bonus depreciation. So we had a cost segregation expert come in a few episodes before. So I think the audience, whoever listened to that, would have understood it. But let's assume they are starting fresh. What is bonus depreciation?
So the tax world has a set of rules where if you invest in something, let's say you bought a bunch of appliances for your rental properties, because you can use that appliance for over several years, you can't write off 100% of it immediately. So normally you have to write them off over several years.
Mhm.
How long you do it depends on the IRS rules for different types of property. So let's say for furniture, you're supposed to write it off over 7 years. Bonus depreciation for 2022 and a couple years before that was where they said instead of waiting over 7 years to write something off, you can write off 100% of it immediately. And so
Right.
that's where you saw like a big increase of a deduction for incentivizing people to go out and basically spend money, right? Invest your money in
Right.
assets and things like that. We still get that benefit slightly changed for 2023. So last year for 2022, we had 100% bonus, which means you can write
Mhm.
off something immediately. For 2023, we're at 80% bonus. So in a
Got it.
simplistic format, if we bought some furnishings for $100, we maybe write off $80 immediately. The remaining $20, we're writing it off over the next 7 years, as an example.
Got it. Perfect. Amanda, thank you again for doing this, so for explaining that. So, Amanda, I know our folks are going to be waiting. Okay, you guys are talking all this stuff, great, but how can I save taxes, right? Because they're looking at. So I know everyone's personal situation is different. This show, we're not giving any personal recommendations, right? So I want to get that disclaimer out up front. So give us some ways where people can think broad perspective. Individual scenarios may be different. And I would also say, just because you're hearing a tax strategy on this show, don't go implement it until you talk to an advisor or until you talk to someone like Amanda, right? If you have questions, talk to me. Talk to somebody who actually can help you guide it before you jump on it, because tax codes are very deep. And what could work for me may not work for somebody else, right? So I want to just get that out of the way.
Yeah,
So Amanda, having said that,
definitely.
tell us the way to think about tax savings, right? Give us a framework of what to think. And let's give our listeners some, if we can, some immediate things they can start looking at without a whole lot of complication, that if they want to wrap their arm around in tax savings, what can they do? And
Well,
for your purposes also, Amanda, one thing is a lot of our listener base is going to be high professional tech employees or in tech businesses, right? Just to give you a frame of reference of who is the audience. So their challenges are different than other professions. So I just want to bring that perspective in.
Yeah, I think that, when it comes to tax savings, especially for people who are high income earners, one immediate action I would recommend for everybody, if you're interested in real estate or generating passive income, is to take action and actually generate that type of income. Because, the money that we're making from our jobs, there's not a whole lot we can do, right? Let's be honest. There's not a whole lot we can do to reduce taxes outside of like retirement contributions, maybe health savings account, maybe more alternative investments that you and I were chatting about that are kind of a little bit more advanced in terms of alternative assets. But if your goal is to have passive income from real estate, as an example, then the ability to have depreciation and writing off parts of your vehicle or home office or travel expenses really results in the ability to have more income without higher taxes, right? So if you're someone who made $300,000 at your job and you paid $100,000 in taxes, but now if we can make $350,000 because we have rentals or other activities, but we still pay $100,000 in taxes, then that's a win, right? So I think immediate action for anyone is to look at how can I create additional income without incurring additional taxes.
Isn't
and
that,
again, that's available to everyone.
Yeah, I think I would just kind of pause because it's an important point. Right? When I talk to investors, they always tell me depreciation is not going to help me because I can't reduce my taxes, right? And I always tell them there's two ways that depreciation can help you. It can help you reduce your current income, and in some cases, but it definitely helps you to not pay income on the taxes on the additional income that you're generating through your passive investments. Right. I think it's a very important point that most people end up not investing in real estate because they think that they can't zero their taxes. That's not about zeroing the taxes. It's about looking at taxes strategically.
Yes, exactly. And I think people who are only looking at offsetting W-2 income are really taking too much of a tunnel vision, right? We're just saying, gosh, here's W-2, I can't reduce it. Therefore, I'm not going to build wealth. I'm not going to generate passive income. And that's just really a silly way to look when you're looking at your wealth building, your finances. You got to take a holistic look. And you're exactly right. If I've invested in real estate and I have these passive losses, which means I can't use against my W-2, you never lose out on that benefit. So you get to use that to offset future passive income, current passive income, or let's say in the worst case scenario, we just don't have income. We made a really bad investment decision and there was never income. Then you can use it to offset your W-2 and all other income once you exit that deal, right? So there's always a benefit. It's just a matter of timing. And of course, there's other strategies that people can use if your situation fits those facts. Maybe you have a spouse who's not working full time that can be in charge of real estate. And that's kind of where the beauty of all this comes in, where you can then unlock the doors of having your rental losses offset your W-2 income.
Correct. So there is a way, but again, you can't wake up on December 30th and say, I want to reduce my W-2 taxes, right? So I think you have to restructure your life a little bit. And when I say life, you're not doing extra effort. You're doing exactly what you're doing. You may just do it differently under different entities, and you have to document certain things, right? So it's definitely possible, but not on December 31st. So you have to kind of plan for that, right? So, Amanda, what are some of the other things for W-2, right? And I know there are some advanced tax strategies. There are some asset classes that we can bring in to even help our current W-2 friends. What are those? Can you touch base on a little bit on those? What are some of the asset classes and how to use that?
Yeah, it's interesting, right? So you and I were chatting earlier before we started the show about possibly oil and gas. So for some of our clients who are not able to use real estate immediately to offset taxes, but maybe they had a high taxing year because of stock vestings or, whatever other windfall activities that generated, we do have a handful of people who look into oil and gas every year. It's one of those many loopholes in the tax code where they say if you are investing in typically these are set up as syndications, right? So if you are one of many investors in a syndication, the fund will go out and do oil drilling. And in exchange for that, if it's set up correctly, you can get a very big depreciation or depletion deduction in the first year. So we've seen anywhere from someone investing $100,000 and getting $80,000, $85,000 of a write-off in that first year that can be used to offset W-2 and other income. So this is one of those tiny loopholes in the tax code that says you don't have to be the one drilling for oil. As long as it's set up correctly, you can use that loss. What's really interesting about this whole oil and gas concept, just for our listeners, is that because gas prices have gone up, quite a bit, right, in the last couple of years, when they strike oil, the investor will get royalty income. And this works out really, really well, what we've seen in clients where they have high royalty income, but instead of paying taxes on that, if they've also invested in other real estate, whether it's their own rental property or an apartment syndication, those passive losses now can offset that oil income. So it's kind of a double benefit, right? You got a deduction when you invest in the oil, and then later when it generates income, now I have these other passive losses that can offset each other.
Yeah, so I think let me just synthesize that, because I think you threw a lot, which is a lot. It's not great. People have to listen to it a few times, and I would recommend you listening to that 5-10 minute recording, rewind it and kind of re-listen to that. But what Amanda is saying is, remember how we were just talking briefly about how if you're in W-2 employees, both you and your spouse, you may not be able to maximize the depreciation benefit to offset your current income. Now what we're saying is, when you look at that in isolation, that is still correct. But when you actually now, let's say, for example, pair that with oil and gas, using your depreciation from oil and gas, you can write off your W-2, and using the depreciation in your rental portfolio or through rental syndication for apartments, you can now offset the royalty income that's coming from oil and gas, right? So it's really, really, really neat which I cannot emphasize the importance of. You can't just say, I know the answer. It took me 4 to 5 years to even understand what Amanda was saying, not intellectually, but experientially, right? I understood what she was saying, but I didn't know where to find these deals. I had to build a network of doing that. So you really need to work with somebody who actually understands it, not just conceptually, but actually has investors or clients who have done that. So they can hold your hand to at least expose you to that. Amanda, what are your thoughts on that? Did I understand it correctly, what you were trying to say? I want to make sure I'm not putting words in your mouth.
Yeah, no, exactly. And that's the whole, we're saying take a look at a picture holistically, right? We said, oh, well, you invest in an apartment, you don't get any benefit because you're not doing it full time. Then let's strategize on how can we get more passive income? Because ultimately, isn't that what we all want to do, right? We all want to generate more passive income. I think a lot of times for people in the tech industry, and we have a lot of clients in tech industry or the tech space at least, and, stocks, right? Stock gains, that's a huge one. You can have millions of dollars in capital gains one year, which is great. It's a great windfall. And so one of the strategies that we can currently use, at least still for now, is opportunity zone. So typically when you have capital gains from stocks, you're going to pay the tax. Then with the after-tax money, you can maybe reinvest in real estate. So opportunity zone is one of the benefits that allows us to take capital gains money and invest in things like specific real estate without having to pay the capital gains taxes up front. So that's when we have a lot of our clients look into with respect to capital gains from stocks or crypto. And I think that one of the biggest benefits is not only do you get to defer that tax until 2026, but also if you hold that opportunity zone asset long enough, 10 years later, you can have up to 10 years of tax-free appreciation. So that's something pretty significant. If you bought a property for $500,000 appreciates to $1.5 million, it might be possible for you to never pay taxes on that $1 million capital gains. So very powerful strategy.
I think it's a very powerful. I've used it myself. I know how powerful it is. I mean, especially with the RSUs, because RSUs are phantom taxes. You can't really materialize the gains, but you still have to pay taxes as an ordinary income, which kind of hurt you when you started doing that. These options with multiple different asset classes can actually help you. One thing you said about, tax deferral versus tax avoidance is not the right word. I can't figure out the right word, because there's one is where tax elimination, two different strategies, right? So we're talking about the opportunity fund, zone funds, is you're basically eliminating your taxes, but of course there's a price to pay of keeping it in a certain opportunity. But then the other option is to use depreciation and other things, which essentially is just deferring your taxes. And there are ways to completely eliminate it at some point in your not in your life, in somebody else's life. So there's step-up gains, step-up bases and all. We could talk at length on those as well. But there are ways. I think it's really important for where I was going with this is it's important for you to work with a tax strategist, not really a tax accountant, a tax strategist really, which is Amanda. And there are several of those who we work with through our investors as well, to want to make sure you're working with the person who's actually knowledgeable enough and also doing it themselves, right? There's one thing to do only for their clients, but also to do it yourself. Because hopefully you're working with a tax professional who's making millions of dollars and they have the same problem as you, as a high-paid employee for some tech firm. So Amanda, I know you and I can talk at length. I love taxes. I know you love taxes. And I'm sure our listeners can continue listening to your advice. But I want to be respectful of your time. I know we have a hard stop. So we want to end the show usually with two notes, right? One is going to be, if you were to go back to your 20-year-old self, what is that one insight you'll give to your 20-year-old self where their path and their migration in life becomes both intentional and easy?
Oh man. I think when I was in my early 20s, I was really unsure of myself. Like I didn't know if I had the abilities. I kind of wish I was older and wiser, like waiting later to start. But I think if I had to go back, I would have started earlier, start investing earlier, started my business earlier, and just, kind of be less fearful of these opportunities.
Awesome. Thank you, Amanda. I think we can all benefit from that advice. And Amanda, what is your one wish and desire for the humanity to migrate towards, right? Just taking a bigger perspective here, because eventually there's only so much money we all need, not want, but need. At some point, it's going to become very hollow without a bigger purpose. So what's your one wish and desire that you see in the world today?
Gosh, there's so much, so much wishes and desires I have for the world. If I had to pick like the most important one, gosh, if I had a magic wand, I think cancer, the ability to cure cancer. Lots of people, friends and family and colleagues have been impacted by that. So I think that's one thing. Of course, as an accountant, I'm doing nothing to help further that. Besides maybe making donations.
You're making I lost my dad to cancer, so I know exactly what you mean. That it's a disease which we need to get a handle on, and hopefully we can. So I think we can do one thing: we can contribute, and we can partner with people who are actually trying to help. Right. So the more you save in taxes, so hopefully more you can donate. So that's your role in the world
I like that concept. I love it. Yes. Amanda, and there's a lot of great tax benefits of donating. Of course, we can talk about that at length too, right? Any of these topics we can talk for hours on.
Amanda, I think I'm going to have to bring you back, because I can only imagine my listeners' minds just exploding as mine did about 7 years ago when I started the journey. But I want to be respectful for your time. Amanda, if people do need to talk to you about their own personal situation or any tax topics, where can they find you?
Yeah, my website is the best place to find me. It's KeystoneCPA.com. And so we also have a lot of free downloadable resources on our site as well, more specific to real estate tax strategies or how to use real estate to build wealth and save on taxes. Yeah. And if you want like daily tidbits of tax tips, the best place to find me is on Instagram, Amanda Han CPA.
And you got to get Amanda's book. I cannot recommend that enough. It's a great book. It's a K through 12 version, less jargons. It's actually a lot of value in it. I love that book. Great. Well, thank you, Amanda, for coming on our show. We really appreciate it. A lot of insights. I know the time is short always, but that's not the intention. Is not to solve everyone's tax problem. The intention was to get them thinking. And you did it well. Thank you again, Amanda.
Thank you so much.
If you got value from this episode, you might consider sharing this content with a friend. But most importantly, be sure to take action on what you've learned. One way you can take the next step is to connect directly with Saket on an investor call. That link is waiting for you in the show notes below.
The content of this podcast is for informational purposes only. Please consult your own advisors when making any investment decisions. keep listening. We'll see you on the next episode.